Welcome to Trading Lounge and the European indices. We'll cover the DAX and the FTSE. We'll cover the DAX in more detail though, and this is the same pattern as the S&P 500. So we're looking at 1, 2, 3, 4, 5 up here for wave 1, and then A wave and a B wave and a C wave here for wave 2. We've also been looking at this particular pattern here as a wave 4 as well, but we'll just stay with this for the time being. But an A wave here, a B wave here, and a C wave to drop lower from this point here. So let's go in and take a close. So on the 4-hour chart here, we're looking at, well, we've got 5 waves down here. So we know that at some point we need another 5 waves, and we don't have those 5 waves coming down through to here. So we're still expecting them to come down. So, I mean, the bottom line for that is that let me explain. So you've got the market pushing up, right, in an uptrend. So when you get the market pushing up in an uptrend and then you get 5 waves in the opposite direction here, then after a correction, which could be simple or it could be complex, then we would get another 5 waves. So that's where we are in this space here, waiting for these 5 waves here. So I just need to go back over this a little bit here. So we can look at this here as an A wave to here, and then a triangle pattern here all the way over for a B wave sitting here. Now, if that's the case, then we're left with 1, 2, 3, 4, 5 waves here for wave C of B here. And then we can look at, if I copy this here, we can look at this as 1 and 2 here starting to come down from this point. All right. And then we'll look for, whoops, I'll just put wave 3 in here. We'll be looking for 5 waves in blue here. So I'll just leave that for the time being. So the other point here too is that if we take this low here, which we could look at wave A being here, and then an ABC here for wave B here, then we need 5 waves to come up in wave C here. And in that case, we would look for wave 1 here and 2 here, and then 5 waves in here for wave 3 and back for wave 4 here. So that's okay. But at this stage here, this top here, we can't allow that to be breached. So if the market moves down, then we've got overlapping wave structures here. So then it means that this count here with wave C here, 1 and 2 and 3 here would be correct. So that also means that we can go short under this low here, because otherwise we'd look at this as 1 and 2 and 3 here, an A and a B and a C for wave 4 here, and then we'd push up from that point. So let's just go in and have a look at that scenario. We've been working that, and we've had a few trades in this section here, but that's all panned out nicely. So 1 and 2 here, then 1, 2, 3, 4, 5. So to me, that's all really clear here. So as long, I put this red line through here, so it's just touching the top of wave 1. So if the market moves below that, then we can rule out, we can cross out this count here. We can eliminate this count, put it that way. So I know that we've got 5 waves in here. Then we've got our correction here coming, because we talked about that last time, would come back up into this space here. So we couldn't go long unless we were on top of that there. So that's okay. We saved ourselves there. And now we've got this move down. Now this could be an A wave, a B wave and a C wave here for wave 4. And as long as it doesn't overlap wave 1 here, we're good to go to the upside here. But if that low gets taken out, then we'll need to be on the short side. So on the short side, as mentioned, we can look at that low being taken out. We can adjust that a little bit further, really. We could bring it over here to the 12,500 area there. And we could look at it in terms of a bearish move. So this is what we would want to see. If this was the 12,500 here, we would want to see a move that came through here and then rallied back up. Now it may only rally, back above the 12,500. Then we would need to see it come back under and do the same pattern here. Or it could just, where's the other pattern? It may just do this. If the 12,500 is across here, then it comes down here and then retest. So we don't want to chase it through this. We want to see the retest come into play here. So once we've got that low in place, that becomes our signal here for one, and then we can get a better entry here as well on the second one. So they're the two patterns that we're looking for at the 12,500 here. So even though I call, say, this low here, we can move in and refine our situation a little bit earlier in here as well. I'll leave you to refine it any further than that, above the 5,500. The 500 is the support, so be very careful what you do above that. In terms of being long here, then we want to be taking that high out here. And in that case, we can move, this is group 2 here. So that's 12,650. That's a 65 number. So 65, 72, and 80 here. If we get support next time around on the 65, then we can look to go long at that point. So the opposite here. So if this is the 65 here, then the market will come up and touch it and react and eventually find it migrate over to the support area, or it could even be like this here where it doesn't drop below the level here again. So you're looking for that support there. So that would take us up to the close to the 13,000 at that point, because we'll be looking for a wave 5 that would take us above here at that point. So we can go long here. We can also copy and look to add on top of 72 and 80 here, and the same with the downside here as well here. So we could add under, that line is at the 400, so we can add under the 400, and we could also add under the 300 here as well, because in the other picture, remember, we're looking at, if I can just borrow these again here and just do 2 of them at this stage, on the downside here, we can also view this here as wave 1 here, probably wave 1 here, and wave 2 here, with an A wave, a B wave, and a C wave up here for that. And then we'll be coming down for the third wave. So this would be down for 1 here and back for 2 here in this case, coming back into wave 2 and then down here. So realistically here, this could rally from this low, from this high here rather, from this high to this low here. That's the 61.8%, so it's sort of there already. It might have another jab at a high there, but essentially that should lock it there to the downside at that point there. That's also at 600, so we always gravitate to the closest largest number. So that 600 is going to be important there. So I'll just think I'll leave it at that, really. I mean, it's a little bit messy, but it will get us on the right side at the right time. You'll be able to refine that further, just going into the 15-minute chart or 5-minute chart or the tick chart and so on. But that's our setup for being on both sides here for this at the moment. Let's just sort of, should we recap that there a bit? We should recap it a little bit, shouldn't we? So this is our picture here. Because we've got 5 waves here, we're looking for another 5 waves after a correction. It's just a little bit unfortunate this correction has been so humongous compared to wave A here. So that's why we're thinking it may be a wave 4 over here rather than a wave 2, but I won't go into that at the moment because it doesn't make any difference. Yes, and it's not only big compared to this here. I mean, when you get a wave 2 correction, it's normally really swift and sharp. 5 waves down, 3 waves back up, really swift and sharp, and then another 5 waves down. But this B wave has taken so long here. It's just been, just been a bit of a headache, really. I mean, it puts us to the test, put it that way. And yeah, so there we go. I think the other thing just worth mentioning is, I mean, it's really been the Nasdaq. This is the same pattern as the S&P 500, but the S&P 500 is being lifted up like a puppet from the main tech stocks on the Nasdaq. So looking at seeing weakness in the Nasdaq will be a very strong key for seeing this market move down further from here as such. That's how we would see it that's how it should be. This wave A here should have some correlation to wave C in terms of equality now that we've moved up here so high, and I wouldn't expect it to really move down much further than this at the same time as well. So yeah, that's it really. Let's have a look at the FTSE, which is obviously been a lot softer than this market, and here we've got the same thing. We've got this 5-wave structure here, and then we've got this mess here. My best interpretation of this would be the A wave to here, and then the triangle pattern, the A, the B, the C. Oh, that's not quite right. That's not right at all there. So that needs to go. And that doesn't even seem right at this point here as well. Okay, we could just have to do it that way, the other way. Have to go that way. But either way, whichever way you look at it, it's just messy. But, you know, I haven't, I've sort of shied away from that a little bit in all of this because I knew this market wasn't going to lead us to the upside. It would certainly lead us to the downside, and that's why we're short in it already here. And we went short on it based on those 5 waves here. If you remember, we're looking for a corrective move, so I've just popped the stop there. We're short here at the moment, and just expect this to drop down. I'm being a little bit conservative with this here in this terms of this 5 waves here, but you know, this could come down further based on what we're seeing with the DAX. Alrighty, I'll leave it at that. Thanks for tuning in, much appreciated.